Hi there. Welcome to 3 Minutes with Jay. Jay Bala, Portfolio Manager, AIP Asset Management in Toronto. Jay, it's been about a month. Markets are selling off. How you feeling?
Oh, finally. I mean, it's look, we've been waiting for a correction for a while now. It looks like, what we were saying before makes a lot of sense. As you know, we've been sort of over allocated to short-term bonds and we've been over allocated to cash and underweight equities. Now we can sit here and pick and choose our moments. The great thing is both the bond markets and the equity markets have been selling off. The equity markets, obviously, they're down about 1,000 points over the past 2 days. A full correction, I mean, you're probably looking at a 10% correction. So, you've probably got another 1,000 points to go.
Let's take a look just for a moment outside of the markets.
Right.
Cryptocurrency, Bitcoin is off plus 60% from its high. Like if you were a buyer, Bitcoin at 20,000 US and you're looking at 7,000 and change now, you need a plus 100% return just to get back to even.
Yeah, well, you need a triple, right? I mean, basically. So again, good news is we're not invested in any Bitcoin or cryptocurrencies. So now we can at least wait for the bond markets to finish selling off, and hopefully we can pick up some nice long-term bonds with some juicy yields, right?
Last summer, you and I were talking in great detail about, the markets were running up ever since Trump was elected. And one of the things you alluded to was actually waiting for the bond market to have a sell-off so that you could start finding some long-term opportunities where you could lock in some higher rates. Are you finding them now, or are we still just a little bit away from locking in some value?
I think we're still a little bit away, and like the key driver right now that's pushing the markets down and freaking everybody out, it's inflation fears, right? So everybody sort of baked in the idea that the Federal Reserve in the U.S. is going to raise rates 3 times this year. And the latest numbers that came out, the key drivers was two things. One is, earnings didn't come out as strong as people had expected it to. And the other one is inflation fears, right? So inflation came in a little higher than expected. Now, on top of that, if you add this tax cut, which is a massive stimulus to the economy, which is already running at capacity, it's, well, how high is that inflation going to tick and how fast does the Feds have to start moving, right? So, I think this sort of bloodbath in the bond market is just starting.
Yes, now in Canada, we just had another rate hike. And what are you seeing for the Canadian market? What should people up here be worried about?
Because we're so closely linked to the U.S., we basically follow what the U.S. does. So if the U.S. gets aggressive about raising interest rates, we'll come in pretty close.
The U.S. currency is really finding some stress around the globe in other currencies. Do you see that continuing?
It is, but again, keep in mind, if the Fed gets aggressive about increasing interest rates, all of a sudden buying U.S. bonds becomes very profitable, right?
Right. So what I'm hearing then, if I were to summarize all of this, have a strategy, have some plans around what you're doing with money, be patient, stick to what you believe is going to pan out, and don't go chasing after things.
Exactly. And look, if it looks too good to be true, it probably is, as Bitcoin has showed us. Nothing goes up forever. And when the markets do come down, also remember nothing goes down forever, right?
All right, that's awesome. Thanks, Jay.
No problem. Thank you.